What's up, everybody? It is Thursday, December 26th. I hope everybody had a nice Christmas. Happy Hanukkah. It was kind of a slow day. You know, we're still in that holiday mode. I suspect tomorrow's going to be slow, and next week is New Year's. So this is normal. I always say, be careful because the markets can be very thin. You could have wild moves, I've lost a lot of money day trading back in the day, in weeks like this when it's really thin. But I wasn't doing that today. But you could have if you were a subscriber of my report, because this morning, early in the morning, I wake up very early. So I have some subscribers who are overseas. And the market was down like 150 points or something, both the NASDAQ and the Dow. And I sent out an email. I said, you got to be buying these dips because we're still in a very positive monetary condition. And when I say monetary condition, I'm talking about the fiscal flow environment. I don't, when I say monetary condition, that's the true monetary condition, okay? If you listen to monetarists talking about the monetary condition, whatever they're telling you is wrong, because lower rates is not a loose monetary condition, and high rates or rising rates are not a tight monetary condition. And those of you who have been a follower of mine or understand MMT, you know why that is true. Okay, I don't have to explain it, and I'm not gonna use this video today. It's gonna be a short video anyway. I'm not gonna use this today to explain. But the funny thing is that I've had subscribers in the past who, they went away, they canceled whatever, because I think they were interested in short-term trading. I mean, there's a lot of people. And I've been through this discussion. I've had this discussion with you guys many, many times, how this desire to have the market pay you a salary like every day, pay you a wage through short-term trading. And I don't blame a lot of you, because there's a lot of fake stuff online. There's a lot of promotional stuff online that makes it sound like there's some holy grail out there, that you can have some system fairy that you can sign up for, or some algo thing, and you're going to make money every single day and stuff like that. I always go back to that line from the book, Reminiscences of a Stock Operator, where Jesse Livermore, the famous stock operator of the early 1900s, and he said, he always would get a kick out of these traders on the stock exchange who said, I'm going to buy my wife a mink coat today. The market is going to pay for a mink coat for my wife. And the mink coat ended up costing like 5 times more than if he would have went to the mink coat store and bought it, okay? Because that's how it is. But, I think a lot of people have this kind of gambling genetic, and we see it. I mean, we see it in sports betting. We see it in look at Vegas. I mean, the whole thing is fueled by a gambling, obsession. And so I understand it. I try to help you guys out, not just in economic outlook and commentary, but also in the mental aspect, and try to get you off of that. Anyway, I went way off topic. I said, the funny thing is, I've had subscribers who went away because I think they were looking for short-term stuff, that kick. And I'm giving it to, almost every day. Like this morning, I sent out an email. I said, you got to buy this dip. And whatever your instrument is, SPY or QQQs or futures, you could have made money on this, all right? And that's all based off the flows. I'm not drawing lines on charts. I'm not, there's not some magical, moving average crossover combination. I'm telling you that when the flows are such and such, and they're positive now, the monetary conditions are positive, if you have a down day, you go long. And vice versa, if monetary conditions are negative, like if you have a tax drain or something like that, I mean, you could still play this. I don't encourage it, but you could still play this market very short term if that's your thing without, go searching around for some system theory or drawing lines on charts or anything else like that. Like, it's not going to work out every single time 100%. Like some people ask me, well, Mike, if today's a Social Security payment or if tomorrow's the first of the month payment, does that mean absolutely it's going to go one way or another? I said, probably will. I can't give 100% guarantee. But within a 2-day window, that means the day of those flows and the next day, I would say the chances are close to 95, 97%. Now, anybody who knows how to bet, anybody who plays poker, if you have a hand like that, you double down. It may not be the winning hand, but most of the time it will be, and that's how you make money. Anyway, here's some other things I want to talk about. A subscriber and a friend of mine asked me, Mike, what do you think if Trump starts to reduce the deficit? Well, which may or may not happen. I'm not making a call on that, okay? Like I've been saying, there's a lot of moving parts when it comes to economic policy in the new administration. You have tariff proposals, you have tax cut proposals, you have the Doge thing, which is spending reductions. So I don't know how all that stuff's going to come together. We'll have to see. But I would just say this. If the economy is growing at 3%, you would need a 900 billion reduction in spending, and not just spending, but a 900 billion reduction in the deficit to wipe out the growth. And that does not include any multipliers, which any economist would tell you that you have to consider multipliers. Multipliers are like, if I lose my income, then I can't go to the grocery store or the department store, or the gasoline station loses some of its income. Then if they lose some of their income, then maybe they have to lay somebody off, and then that person loses their income. And so there's a multiplier effect, which most economists put at around 3x, 3 times. So I would say if there's a 300 billion reduction in the deficit, okay, and a reduction in the deficit would mean any combination of spending cuts and tax increases that would equate to 3% of GDP. Let's call GDP 30 trillion right now. To me, that would put growth at 0. And anything beyond 300 billion, I would say we're in negative growth. Okay, so that's a number, just pin that up on your wall. That's a number you want to pay attention to. So last year, the deficit was around 1.4 something trillion. It means if they take it down to 1.1 trillion, and by the way, right now, on the trajectory that we are on, it doesn't seem like it's going to get anywhere near there. It seems like actually we're up right now by at least 150 billion. So we're actually looking at something closer to 1.55, 1.6 trillion. So, but again, I don't know once Trump gets in, this is the trajectory we're on right now under the current administration and the current Congress. So once the new Congress and once Trump gets in, we'll see what happens. But keep that number in mind. 300 billion, that's my number. If the deficit drops by 300 billion, then I think growth goes to 0. And anything over 300 billion reduction in the deficit, growth goes negative. And that's not going to be good for stocks. And again, I'm not calling that right now, but I just gave you a number. The other thing I want to talk about, and I'm just going to wind it up here, is a friend of mine, he emailed me because I said, again, they just keep talking about the debt and the deficits. I've been in this business, folks, since 1979, okay? What's that? That's like 40, 45, going on 46 years. And every single year that I've been in this business, there's been these Cassandras, the sky is falling, talking about the debt, okay? The debt, when I got involved in this business, when we basically went from Jimmy Carter to Ronald Reagan, the debt, the so-called national debt under Reagan was 800 billion, okay? And everybody was saying it was going to bankrupt the United States. The debt has multiplied by 40-fold, okay? We're basically, we're at 36 trillion, so that's like almost 50-fold, like 46 times. And inflation right now is running at about 2.4% or 2.7% annually, depending on which measure you look at, okay? So the debt has gone up by, let's just round it off to 50-fold, okay? And nothing has happened. And if you take out the pandemic, the COVID, and the shutdown of the global supply chain, because you could look at any graphic that shows you it was just falling, then we had that spike, then it started coming down again when things started to normalize. And the thing that really gets me is that these people just continue to go on when they never can tell us what disaster is going to happen. They just keep saying eventually. I've been in this thing, what did I say? Almost 50 years I've been doing this fucking thing, okay? And nothing ever happened except for this damn pandemic when they went crazy and shut down everything, all right? 50-fold, this stupid so-called debt has gone up, and these people are still out there talking about this shit, saying the sky is falling, the sky is falling. I am sick and tired of this crap, okay? And if you believe that, if you're one of them, and I don't care if you just came on board, because you're an idiot then, and you're stupid, because you got to learn, and you got to educate yourself, and you got to look at history. Nothing has happened, and it's dictating everything. Well, maybe not, but it will. It's going in that direction, because the chorus of people screaming about this has never been bigger than what it is right now. And it really, really upsets me. I guess you can tell. Anyway, that's it for today, folks. I've been telling you, we got first of the month payments coming in next week. That's going to be another big flow day. S&P is going to make a new high. And NASDAQ will probably make a new high. Dow is going to come back. The monetary condition is very positive right now. Nothing is going to change. The only thing that upsets me is what these maniac inflationista idiots are doing in the bond market. I mean, last week I sent out a chart of if you're familiar with the Baltic Dry Index, that's an index of freight rates, shipping rates. That has absolutely collapsed, okay? And shipping rates are a fundamental major factor in global prices. And if shipping rates are falling down, and the Fed knows this, the Fed is looking at this, the stupid Powell is taking his cues, he's taking his marching orders from people like freaking Paul Tudor Jones and Stanley Druckenheimer. I mean, this guy, I hope Trump puts a lot of pressure on this guy, which he should, because he's keeping rates high, which is actually slowing the decline in inflation. This guy knows nothing. He's an idiot. He should go back to practicing law. He's probably not even good at that. That's all he is. He's a lawyer. He should go back to doing that. and they need to get somebody who knows, and they're not going to find somebody who knows what's going on. So what am I talking about? What am I talking about? I have no idea. Anyway, that's it for today, folks. Please like and subscribe and go to my website, sign up for a 30-day free trial to MMT Trader. You're going to want to know what's going to happen. And by the way, if you're a short-term trader, I welcome you, okay? I don't advise that to my subscribers, but I welcome you, and you can use this information to short-term trade. And I give signals, all right? Anyway, have a good one. See you tomorrow. Bye.